The S&P, NASDAQ, Dow, Russell 2000, every single one closed Friday at fresh all-time highs. New peaks, new territories, and yet the sentiment, bearish. There's fear, there's doubt. The masses are convinced that we're about to fall off a cliff. And last week I told you that Bitcoin needed to convincingly break above 117,400 to maintain our bullish thesis. We touched higher prices, yes, but conviction, where is she? Today, we're going to dissect this market from a macro down to micro, and I'm going to show you an indicator that is screaming bearish right now and why you really shouldn't ignore it. We'll explore whether or not the recent rate cuts and options expiries are still yet to lead to a sell the news event, or are we clear of all that now and ready to follow stocks and commodities to new all-time highs? If you've been holding through the doubt, through the noise, through the endless predictions of doom, then this video is for you. I'm Annie and this is Trade Trouble Chill. Let's go and see what the market is really telling us. But before we deep dive into that, I just need 30 seconds of your time for something really important. YouTube's algorithm has shifted recently and it's affecting view counts across the platform, every channel, regardless of size. Now, here at Trade Travel Chill, we refuse to buy views or subscribers just to secure larger sponsorships. We believe in organic growth. We believe in earning our audience through value, not through vanity metrics. But I need your help. If this content resonates with you, if it helps you see the market more clearly, just take a few seconds to hit the like button and drop a quick comment below and subscribe if you haven't already. That simple act tells the algorithm that content like this matters. Your support helps us reach more people just like you, people who want to truly understand the market and not just follow the herd. Now, let's get to work and let's have a look at Bitcoin. I'm going to show you on the daily time frame first. We can see that we very clearly have a lower high that has formed after a double top on Bitcoin. Right now, when I have a look at the major sells above price and the major buys below price, the significant orders for shorts are sitting around 120 to about 122K, and the significant longs are sitting at about 105 to 108K. It's fairly far from the current price. But the indicator that I want to focus on for this video is not this one here, which is the TBD indicator. It's actually an indicator called Ichimoku cloud. Now, when we turn on this cloud, what you can see is that when we created this peak formation high around mid-August, we dropped through the cloud, we retested the upper boundary of it, and then we continued to drop to about the 107.5K region, which was our target. Since then, we've moved back up to test the upper range of the cloud and test that as resistance. When we zoom in on the last few candles, what we can see here is that the resistance line of the cloud is at about 116K. Yesterday's daily candle closed below it, and today's daily candle, even though there's still 13 hours to go at the time of filming this video, is currently also below it. So basically what's happening here is that this line of the cloud is acting as a dynamic resistance. And the fact that the price is struggling to break cleanly above this suggests that the cloud is acting as a significant barrier. Also, as you can see, the cloud gets really quite thick in this area, and that indicates a very strong support and resistance level. When you have thick clouds, it represents more significant zones that often require more momentum to break through. If we go back in time to have a look at how this has performed, what you can see here is that when the low was put in at about 76.5K, the price rebounded and then it consolidated just below the cloud whilst it built the momentum to convincingly then break through the cloud. Now, this was around mid-April, and for some time we held quite high above the cloud before eventually coming back to retest around the middle of the cloud in late June. That's when we then took our second run, again held above the cloud until we eventually came back towards the end of August. And if we zoom in on that area, what you can see was once we broke into the cloud, we then retested the top of it as resistance, eventually broke down again, and now we've come back up to retest it as resistance again. So when you're looking at Ichimoku on the daily time frame, the moral of the story right here is that if we are to have continuation to the upside, Bitcoin needs to decisively break above this cloud with volume. And if it can do that, that would signal continuation of the uptrend and likely take us towards this 120K region, and potentially beyond, but that would be our first area to reassess. However, if this cloud continues to act as resistance, that could signal that there's more downside to come, potentially to retest around the support of this cloud, which is at about 113K. And if we can't hold there, we could then see a bigger correction into our high level of liquidity. And this sits between about 105 to 108K. Now, of course, we would have to see what happens at this area first. If we don't get a strong bounce out of there, that's when we would start to prepare for these lower prices. However, the good news is, even if the price does come down to retest this lower boundary, if we saw the buyers step in there, we would then expect continuation to the upside, as it would simply be a retest of a prior support and a prior resistance. So when we're looking at the daily time frame, we've got two things that we want to watch this week. Either we break above the resistance of this cloud convincingly. In that case, we would expect continuation. If it continues to act as resistance, we would expect that we may come down to test the lower support of the cloud and also this key area. So somewhere between about 112.5 to 113K. That's the area to reassess and decide if we're then going to go lower than that, or that's where we're going to get our bounce. And that's exactly what I'm going to be looking out for this week. So this shows us that both of these areas are our critical areas to watch this week. Like I said, a clean break above with sustained momentum would be bullish, whilst a rejection could lead to further consolidation or a pullback into the 113K. This sideways action that we've seen since around mid to early July suggests that the market is in a distribution or accumulation phase, with the cloud serving as the key battleground for the next directional move. Now I want to go and have a look at the cloud on the 4-hour time frame. Just to note, when I do use the cloud, I generally don't use it below the daily time frame unless I'm using it as a scalping strategy, but that's a whole other story. But when I looked at it on the 4-hour today, it was significant, and that's why I want to point it out in today's video. Now, before I get into the cloud, let's just talk about the TBD system so that you can see how it matches up. As you know, if you watch this channel regularly, we did catch this long down here, and we've been long ever since. However, the area of interest to decide whether we were going to continue was price creating a higher high above this zone. Now, just above this zone is where we have a very significant vector. You can see that it was a high volume candle that was very small after a period of consolidation, and that's where price fell away. That means there were strong sellers in this zone. We came up to retest it but couldn't break through it. That showed us that the strong sellers was still there and they still had the most power in the market. So really, it was key to see what happened if price could get back into the zone of this red vector candle. And that's why the 117,400 was a pretty key area. Now, like I said, we did slightly get above it. We got to 117, nearly 900, not exactly, but it wasn't a convincing break. We can see that this whole area of interest is that whole candle, right? And so the dotted line is the halfway mark of that candle. And you can see we struggled at the halfway mark before having this move away late last week. I'm going to show you how these counts play out on lower timeframes in a second to show you that the counts there are complete. And there is a very high chance that this is the beginning of a 3-level move to the downside. The only thing we're waiting on right now is to see if this 4-hour range breaks at about 114,600. If it holds, it's possible that all of this is a high time frame rise 1. This is a board meeting, and then we end up going up for rise 2. So that's, again, what you want to see. If this level holds this week, you would remain bullish. If we start to break below, it's going to confirm that on lower time frames, this is the beginning of drop levels. Now let me show you what that means with the Ichimoku. So basically, when you use Ichimoku, you can see how it projects forward into the future, right? So what's happening currently acts as support and resistance levels, but when it projects into the future, it can give you an idea of whether or not we are potentially changing trend. And so you can see that the green and the red have crossed over. They haven't started to widen yet, which is one thing. Like, they can cross back and we remain bullish. But if we start to see the cloud widen, we would expect that that is a sign of further bearishness to come. So when we have a look on the 4-hour, it's at a very, very critical level because it's come down into the cloud's resistance and it's basically just consolidating at that resistance right now. So if it bounces out of there, that's bullish. However, it may also come back to test the lower range, and that's what we have to be prepared for as we head into this week. If we do head down there and then we can't hold that range and this starts to widen, we would expect that a bigger correction is coming. Again, when you go back in time, you can see here how we were above the cloud. We came into it, we consolidated, created a lower high within the cloud, fell away, came back here to test that cloud as resistance, couldn't break into the cloud and therefore fell away again. Eventually we came back up, pushed up to the resistance of the cloud, retested the support of the cloud before eventually changing structure, holding the cloud as support, and that's where we saw the up move. So what we're looking at here is basically what we're going to try to see if gets replicated the other way over here now, where we may break down into the cloud just like we broke up, retest the other side of it, and then actually break through, but this time it will be to the downside. So when you add this to the TBD system, there's a lot of confluence, a very important key area, an initial rejection at the key area. We don't yet have a change in market structure, so we should remain neutral, waiting for more evidence. But there's a few hints there to give us an idea of what the next move might be before it actually happens. Either way, using the cloud and using the TBD system together on both of those timeframes tell me that if we can retest the support at around 113 to 114K, and if we create a higher low there, we may see further upside. But if we drop below it, we may then see a further correction. Timing in trading isn't just about when to buy or sell. It's also about recognizing genuine opportunities when they present themselves. And speaking of opportunities, our friends at Weeks are offering a very big deal for the TTC fan. Well, they're giving you guys a massive 20% deposit bonus that actually makes sense for serious traders. Now, Weeks is an exchange that understands what real traders need, proper execution, competitive fees, and now this substantial bonus that can actually impact your trading capital. The 20% bonus applies to your first deposit, which means if you're planning to fund a trading account anyway, this is essentially free money to work with. Not only that, people who join Weeks using the link in our videos will also get an automatic VIP 2 trading fee tier rate for life. You don't have to earn that level in volume, which is really hard to do. You get it automatically just for being a supporter of this channel. Now, I've included the link in the description of this video below, so be sure to use that to join Weeks for both of these bonuses to apply to you. Now, let's get back to the charts. I want to have a look now at Bitcoin on the 1-hour time frame because I want to show you those levels that I talked about earlier. I've gone back and marked all the way since we had this inverse head and shoulders towards the end of August to show you how all the levels have played out. So from there, we had our 3-level rise, which took us into the weekend trap. Now, all of this on a 4-hour time frame would equal 1 level. Then going into the beginning of the week that started 8th of September, we also had another 3-level rise that trapped us again into the weekend trap. And this all would equal a level 2 rise on the 4-hour. Now, the week that we just had was really super choppy and people may count it in different ways. However, the way that I personally count levels, I see that this through here was rise level 1, this was 2, and this was 3. Although they were miserable levels, they still count for me. And all of this would equal the 4-hour rise 3. So that's why, in addition to everything I've just shown you in this video, I have to start looking for signs of further pullback. This we identified last week. This was an M formation. This is where I hedged a short position. Now I'm just looking for signs that that short position is going to continue. And so to do that, I need to go down even further to the 15-minute time frame. This shows you a little bit more clearly where that M formation was. So we got our first peak in Asia on Thursday and we got the second peak in US. So that gives us a multi-session M formation, which has usually a very high likelihood of playing out. On the 15-minute time frame, our 3-level drops are done. However, as we go into this new week, we now need to see if those levels feed up into higher timeframes, meaning further drops on the 1-hour timeframe. The weekend is doing what the weekend does. It's in sideways consolidation. So it's very, very possible that this consolidation is the consolidation between levels on the 1-hour timeframe. When I have a look at the significant buy and sell orders, I've shown you the largest ones above and below price, but the ones that are closest to the current price, on a weekend, they act as the support and resistance of that weekend trap box. So you can see that there's fairly significant buys just below that box right now, and there's a few fairly significant sells just above it as well. That's what this looks like on the chart, these two levels right here. Now, it looks like at the time of filming this, we have just tapped into one of the lower ones, but there are still more there anyway. Now, the important thing to identify in the weekend trap is who's been trapped through the weekend. And that's very hard to do when we're consolidating if that's all you look at. So we tend to turn to get a little bit more help. We look at the volume over the weekend and we look at open interest. Now, the problem that we have is we have fully sideways price and we have very low volume, but we do have declining open interest. What that means is that the market maker needs to issue a fast move, a false move, in order to induce traders into a trade in one direction before they move it the other way. So what you would ideally look for if you're trying to identify the false move this week is a fast move that might look something like a stop hunt and something that brings traders back to the table. At the same time that that happens, it will often liquidate people. So if you're using open interest for your trading, the way you know people are liquidated is when you see large red drops like this. Regardless of the direction of the price, you're looking for large red drops like that. You can see here when you do marry that up to price that we had a support level here, and this candle came with high volume and spiked below it, meaning it would have liquidated anyone who had liquidation levels right below here, and that's why you see that large red candle in the open interest to the downside. So we'd be looking for something similar as the market opens this week. That's going to liquidate people, but also induce more traders in the wrong direction before price reverses. And that's the kind of false move that I would be looking for this week, simply because the open interest is down, the volume is flat, and the price is sideways. Usually the combination of those three mean a false move will be a fast move. Which way that goes is impossible to say, but for me personally, I would actually like to see continuation to the downside because I know there's a lot of liquidity there, and I know that if we do move further, say into the 113, 114, if we do hold there, that's still a macro high low and it's still bullish. So it would actually provide for really good trading opportunities. So an idea of what I would ideally like to see as the market opens is some kind of false move to the upside. Then we move down, have our correction into the 114, 113 kind of area. And then maybe in one of the later sessions, UK or US, Monday or Tuesday, that's where we start to see the reversal into the 3-day swing. That should then give us one direction for 3 days. Now, look, everything I've shown you today is the TBD system. It's the level analysis that we use. It's the understanding of market structure. All of this stuff, it isn't knowledge that you stumble upon accidentally. It's developed through consistent learning, practice application, and trading alongside people who've walked this path successfully. And that's exactly what Trade Trouble Chill offers. Our membership isn't just another trading course that you just buy and forget about. It's a living, breathing community where we live trade, analyze markets in real time, and develop the skills that separate profitable traders from the rest. We teach the TBD system in depth, we provide daily analysis, offer live trading sessions, and most importantly, we're there when you have questions. When you're staring at a chart at 2 a.m. wondering if you should hold or fold, we are there for you. And because I'm confident in what we provide, every membership also comes with a 48-hour money-back guarantee, no questions asked. If it's not what you expected, you get your money back. Now, the link to join TTC is in the description of this video, but understand this. We're not here to try and convince anyone. We're looking for traders who are serious about improving, who want to move beyond hoping and guessing, and we want traders who understand that the market will teach you one way or another. And what we do at TTC is we just try to make sure that it teaches you profitability. Now let's talk about what all of this means for altcoins this week. We're going to go and have a look at the dominances. What you can see here is that Bitcoin dominance is consolidating at the 800 EMA. It's between the 800 and the 20 currently. Still would like to see a lower high around the 50 EMA, but I'm not married to this idea. It may just break right through. Either way, if the dominance is coming down, that still signifies a shift into something else, and all we have to do then is try to identify where that shift is happening. Now, if we go and have a look at this dominance chart, what you can see here is that if the Bitcoin dominance is decreasing, but the Bitcoin price is increasing, your alts will absolutely pump. So if we do get that higher low on Bitcoin and the dominance continues to decrease, your alts are going to do really well. However, if the Bitcoin dominance continues to decrease, but the Bitcoin price also decreases with it, your alts might just be a little bit stable and probably won't give you the best trading opportunities. Basically just means consolidation. That's fine. As long as they're not dumping, we're fine. However, because we're at the 800 EMA for that Bitcoin dominance, you also need to consider the idea that people start to shift back into Bitcoin potentially temporarily. Now, if that happens, the Bitcoin dominance will increase, the price will likely increase, and that will mean your altcoins will pull back. So just be aware of all of these scenarios. Right now, the Bitcoin dominance is just going sideways. So we're looking for that directional move. And once you see that directional move in Bitcoin dominance, then go and have a look at what the Bitcoin price is doing. And that's how you build your expectation as to what your altcoin prices are likely to do next. So then we can go and have a look at the stablecoin dominance. Not a lot to say here. It's literally still consolidating. That's fine. We're just waiting for it to pick a direction, and we hope that direction is down. When we have a look at the totals minus Bitcoin and stables, we're just slowly trending up with higher highs and higher lows. It does look like there's a slowing of momentum here though, because you can see here, these were pretty big moves to the upside, and now we look like we're tapering off and consolidating a little bit. So it may be a little bit of a struggle town for alts right now. Maybe they're just building up before the next huge move. I wouldn't read into this too much, but we did have resistance at 1.46 trillion, which is where we are currently holding that resistance. If we can break through, the next one is 1.58. I don't think there's any real decisions that need to be made on altcoins, or whilst this is continuing to trend above the 50 EMA. If it starts to drop below, that's when you might want to consider taking some profit. You can always add back in later. It doesn't mean that the cycle is over if that happens. All right, now let's talk about the news events that could move the markets this week, because technical analysis without macro awareness is like driving with one eye closed. This week on Tuesday, Japan has a bank holiday, so expect a session behavior shift on Tuesday. Bank holidays often mean less liquidity, and so that can make price a little bit unpredictable sometimes. It doesn't mean don't trade. It just means if the price isn't obvious to you, or the price action isn't obvious to you, then it's best to sit out until the other markets reopen. Now, Tuesday also brings us flash PMI, so don't underestimate these. They've caused significant volatility several times this year. And then later that day, we also have Fed Chair Powell speaking. He's talking about the economic outlook. And as always, Powell's words can move both stocks and crypto depending on his tone and message. Thursday is the main event this week, as we have a triple threat. We've got the final GDP. We also have the weekly unemployment claims. And then we also have the durable goods orders. So why is this a triple threat? Well, this combination creates high volatility potential from late UK session into early US trading. And then Friday brings us core PCE. This is the Fed's preferred inflation measure. Now, since CPI and PPI allow analysts to estimate PCE fairly accurately, it typically doesn't move markets as much as the raw inflation prints. But if the actual number differs materially from forecasts, expect movement late in the UK session. And then finally, Congress is working to pass a spending bill to avoid an October 1st government shutdown. Any headlines around this could create volatility for both stocks and crypto. So the key here is not just knowing that these events exist, but understanding how they interact with our technical levels. The news doesn't create trends. It accelerates or reverses what's already building in the price structure. Here we are, stock markets at all-time highs. Bitcoin is testing critical resistance, and sentiment is bearish despite the possibility of a bullish retest yet to come. This is exactly where fortunes are made and lost, not in the obvious moments, not when everyone agrees, but in these spaces of uncertainty where conviction becomes your edge. But here's what separates you from the crowd. You now see what they don't. You understand the levels, the structure, the interplay between technical and fundamental forces. Whether Bitcoin breaks towards 120K or pulls back to 113K, you're prepared. While others panic or FOMO, you can be well positioned. This week, the market will show its hand. Make sure you're ready to play yours. If this analysis helped you see the bigger picture, you know what to do. Hit like, comment, subscribe if you're not already subscribed. And if you're ready to trade alongside a community of traders that get it, that link to Trade Travel Chill is waiting for you in the description down below. And just remember, the market doesn't care about your timeline, but it rewards those who understand its rhythm.